As I've been warning for weeks, many technical patterns on completely different charts are all pointing to March 11th, this Tuesday, as a crucial date. JOLTS job openings comes out on that date at 10 a.m., followed by CPI the following day at 8:30. Will the markets finally recover, or are we headed much lower from here? I'm not a financial advisor, and you should always consult a licensed financial advisor before making any financial decisions. Dixie, the dollar strength index, had a major false breakout right here and came down to this very, very key level between about 103.40 to 103.70. And in the process, it more than fulfilled the pattern target right here of this big rising wedge pattern I covered before in light blue, which was targeting about 105.80. It shot down through this main support line right around 105 even that we've covered before, but now it's at this key technical level. If we zoom all the way out to the weekly chart, we can see that about between like 103.40 to 103.80 has held up as a key level all the way back to like basically 2002. We came back in 2016, retested it again and rejected, came back up again in 2020, rejected, finally broke above it in 2022. And we can see after that we had multiple periods of consolidation either above or below it. So it's a very key level. And as I keep saying, typically a strong dollar is headwinds to the overall market. So if the dollar decides to rise sharply from here, I'm very curious to see how it's going to affect the market. On the flip side, though, I can't rule out different carry trades like the yen carry trade. So if this just continues to keep tanking, it's probably going to put stress on different markets that weren't expecting it to tank like that. Right now, this is on the 2-hour time frame. The VIX is in this bullish ascending channel, and it's very close to support here, right around 2250. When we look at /VX, the VIX futures, we can see it's also in the same channel, and it's very close to support there around 2140. And when I zoom way out on the VIX futures, you can see just how obvious this falling wedge pattern is that goes all the way back to 2020. And the breakout target for that is somewhere around 75 to 77, which is almost reaching that previous high. And then when we zoom in on the 4-hour time frame, we can see this upper resistance line here that goes back to August 5th of 2024 and the lower support line that also was forming a falling wedge pattern. The breakout target for that was around 35, which would actually place it above the August 5th high and above this very key level here around 33. And when we hop back over to the VIX, we can see the same resistance line. It has held fear at bay since August of 2024, and we have broken above it. And this is exactly why I believe that even if SPY and QQQ bounce from here, it will likely only be a pullback, followed by further continuation down. Hopping back over to the VIX futures again, I want to show you a lot of times with breakout patterns, there's usually a retest or pullback when you reach roughly the halfway mark to the pattern target, followed by the final move. And you can see right now that fear has gotten almost to the halfway mark here on the futures, which would be around 25. So there's a potential we could see a pullback there. But when you look at the 4-hour RSI right here, this looks like a consolidation pattern before another leg up. Back to the VIX, we see that same consolidation pattern there too. And I think we could potentially see a parabolic move to fulfill the pattern target, which again is confluent with this upper resistance line here that goes back for many, many months and into this supply zone for fear. If we drag this back out, I want you to see what I'm talking about. This resistance line goes all the way back to July of 2023. And if we extend it out, I do believe that it's going to show resistance here. And here's a little bonus charting secret. Not always, but a lot of times if you draw a channel, if you have two clearly defined touch points on one side, like here, and if you connect it to the outer touch point on the other side, like right here, when price comes back up to the upper resistance line or down to the lower support line, a lot of times it will be a valid channel. Just like we can see here, we wicked above, but that definitely acted as strong resistance and forced fear back down. On the ADD, the market breadth indicator, we can see right now that the overall market is in this indecision pattern, this symmetrical triangle. And I want you to look at the date right here. Right here is showing that's that March 12th CPI is what this pattern is targeting. And the day before that, we've got JOLTS job data coming out. So this is the market's way of telling us that CPI and JOLTS are going to be pivotal about whether we go up or down from here. The levels I called out on SPY in my last video linked above held perfectly, with SPY rejecting off of this 596 to 597 area, which was this previous main support line of the higher time frame bearish rising wedge. SPY hit the very key level of around 565, which goes all the way back to July 2024, and bounced off of it, which I shared in a recent post. When we throw up a Fibonacci retracement here from where it started really breaking down, from the top to the bottom, if the market had started breaking out from this level, we can see it basically would line up perfectly with a 61.8% retracement. But as you can see in extended hours trading right now, SPY seems to be pulling back pretty sharply. So here's the lower support line here. If this were to pull back and break out from there, look how it would now line up with basically the 50% retracement. Then again, this could all be just a false breakout. And if we break this key level of 560 to 565, I really think we're going to have a waterfall event. And as I've shared before, a conservative target for the breakdown on SPY would have it coming down to this main support level somewhere around 538 to 540. And a much deeper correction could bring it all the way down to about 480, where I think bulls would be drooling. We've got a similar pattern forming on QQQ. It looked kind of like a falling wedge or a descending triangle. If it had broken out somewhere around 493, that would have placed it pretty close to the 61.8% retracement, somewhere between 514 to about 516. However, similar to SPY, it seems to be selling off in extended hour trading right now. And if we break this key level here, it could just keep falling. There are so many puts in the market right now that are stacked that we're in negative gamma territory, and market makers will have to continue selling in order to hedge their downside risks. And like I've been saying, if this huge rising wedge pattern on QQQ here in white is legitimate and it's playing out, we've already broken the channel support of this massive channel that's been going back for years. This goes all the way back to basically June of 2023. And the rising wedge would be targeting an ultimate drop to basically around 430 to 433. We had a similar falling wedge pattern forming on IWM small caps with a breakout target. Basically, if we were to break out from about 206, could place it above this supply zone, above this key level of around 211.50 to 212, and putting it all the way up to about 217. But as you can also see, just like SPY and QQQ, it appears to be falling in extended hours trading. And the apex of this pattern is March 12th, and I don't think that's by coincidence. 200 even is a very key level for IWM. As you can see, basically you were either above it, you consolidated around it, or rejected off of it multiple times. And now we're getting right back down to it. So if we break it and fall below, I think there's a lot further downside that could occur. However, there is always the possibility that we bounce off of it and then retest basically around 211 to 212 and see if we can push back above that. I shared on the YouTube community tab and on social, but I'm sharing here too. This symmetrical triangle pattern on Bitcoin is targeting roughly a move of about 18,000 up or down after breakout. We've already broken support, so if this follows through, it should take Bitcoin down to about 68,000. Alternatively, if this was a false breakdown, as we often see with symmetrical triangles, a measured move could take us back up to about 98,000, below the key level of 100,000 and back into supply. If that happens and bulls can't break through, we could see a waterfall event where this weekly rising wedge bearish pattern finally plays out with a target of roughly 60,000. So in other words, whether we go back up now in the short term or if we head straight down, Bitcoin is ultimately targeting that roughly 60,000 level eventually, so long as this rising wedge is valid. I've made numerous posts lately on the YouTube community tab, StockTwits, and X regarding market direction, including patterns on Bitcoin. And if you aren't subscribed or haven't tapped for notifications, you're missing out on these crucial market-moving insights. And my videos are designed to be entertaining but also educational, and many of my videos build on concepts and patterns previously covered, so if you miss a video, you might not understand everything that I'm talking about. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.